My name is Emmanuel Michael Amogu, and this is Tech Rounds on Tech Build Africa. Very glad to have you on board for another interactive and yet insightful session on Tech Rounds. So, just to put this again, Tech Rounds is that session where we get to host some of the most insightful innovators in the ecosystem to have this conversations around technology, around innovation, around building capacity and expanding the ecosystem, the technology ecosystem. So once again, you're welcome. And today we are delving deep into the world of venture capital, demystifying what venture capital is, what you need to know about venture capital, and how you can position yourself to meet your right investor. Also, we will be looking at the strategies to pitch effectively and communicate your innovation ideas to an investor who you want to onboard to your innovative idea. And yes, today I wouldn't be doing this alone. I have someone who is the right fit for this conversation, Mr. Akitunde, who would be joining me. Akitunde is a partner and co-founder at the Scath Group, and he will be joining for this conversation.
My name is Oluwajimi Akitunde. I'm the Scath Group, TSE for short, which is a hybrid venture capital firm, which focuses on emerging and underrepresented regions. Our current focus is northern, with a primary focus on northern Nigeria currently. I'm a 4X founder, also a graduate of chemical engineering from Ahmed Bello University and with my MSc from HSC Paris. So yes, I think that kind of summarizes the introduction from my end.
All right, thank you very much, Mr. Akitunde. Very glad to have you on board. So, looking at this discussion, I'm saying we demystify everything around the discussions of venture capital. So, we're going to be looking at defining VC, looking at the types of VC, identifying the right the investor for a startup, preparing for the pitch, and the actual negotiation of the deal. So I think these are some of the things that founders and innovators find very daunting and challenging to actually overcome. We're going to share those knowledge and insights that are tailored to these startups, offering them a comprehensive education on the intricacies of venture capital and also empowering them to confidently onboard the right investors for their startup. So we'll just go into the question rounds, Mr. Akitunde. So first of all, for how long have you been into venture capital?
So we'll say 3 years as a firm.
Looking at the years that you have in venture capital, can you break down in simple terms the fundamentals of venture capital?
So in simple terms, I would say venture capitals or venture capital firms are early believers in innovation. And this goes back time immemorial, even from early days of the 17th centuries and all. The people that funded the voyages around the world, got the mapping of the world, and were like pioneers in early innovations were regarded now as venture capitals because they looked at stuff that people won't generally look at and invested in it. And some of them went on to be really good and kind of even changed the world. So yeah, fundamental of venture capital or being a venture capitalist or being a venture capital or having a venture capital firm is just identifying the next level of innovation and believing in it early on.
I know before this show, I had some founders and some entrepreneurs who really wanted to know the basics about venture capital. So, with your experience, I want you to break down those fundamentals, the terminologies in VC, and those simple things they really need to know in their on their fingertips to navigate the world of venture capital. Now, let's look at the terms. Okay, because I want everything to be as simple as possible. So that's the value there. So what are those terms in venture capital that you can throw more light on to simplify them so that these people get to understand? I know there are terms like pitching, the types of investors that we have, angel investor, or all those sort of terminologies in VC that we have. Can you quickly point out some of them and then tell us what they really mean?
So to add on the two that you've already mentioned, pitching just means you presenting your idea to the world, be it the VC, be it public, or whoever you're trying to communicate your idea. A lot of people think pitching is a whole different word at times, but it's just similar to even the project you did in your final year and you put it together and you presented it on a slideshow. So pitching is literally that. Other words are HNWI, high net worth individuals. Angel investors are people that come in and give you those early checks, not necessarily be VC. In my earlier introduction, I mentioned I started from being an angel investor before I opened up our firm. So yeah, an angel investor is so like the word maybe angel coming to save you. So what other words? We have words like DD, due diligence. Due diligence is a process that
No, there is also
take very
equity.
serious because that's how we identify. Equity is the pillar of being a VC. No, yeah, being a VC, equity is one of the strong pillars. Let me use strong pillars because for most deals that we take, and this is one of the differentiating factors, certain VCs would operate as equity PE firms, which is private equity firms. Some will take debt financing, but most VCs come from a PE standpoint, which means we are taking equity in your business. We are not giving you the money as a loan for firms that operate as PE. So what that automatically means is if the deal is negotiated and we have 10%, in anything you do, we own 10%, you lose success and so on and so forth, unless you're bringing in complex terms like dilution and the likes of it.
Yeah, thank you very much, Mr. Akitunde, for throwing insight on that. So I think those were basic enough and simple enough for someone to be able to grasp. So, what are the key considerations for startups seeking funding, and the importance of aligning with the right venture partner?
Okay. So I think first of all is knowing when to raise, knowing if you need to raise and how much you need to raise, and then also looking out for firms that would work with you hand on hand. So the first one being knowing how much to raise is how much do you actually need at the moment for whatever next level you're trying to get to, be it scaling. The next thing is knowing the firms that you want to work with. So there are different investors out there. Some of them, once they write the checks, they are gone. Some of them would work hand in hand with you, try to get you speed to market, connect to different deals and the likes of that. So I feel like it's just identifying what exactly you need as a startup.
Listening to what you've just said, so we're looking at considering the type of investors that a startup can onboard to the innovation. So let's say I am a startup founder and I'm looking to bring in an investor in my early stage. What would be your advice to me at that point, and what kind of investor would you advise me to look out for?
The earlier stages, sometimes I don't really advise you go for VC funding from the earlier stage. It would be more advisable you go with an angel or family and friends at those early stages while you're still building your MVP or testing out your product. So you start to gain traction and you can know your numbers. Then at that, maybe when you're going for your seed round. So, with funding is pre-seed, the seed, the different, and the series is A to A upwards. So at pre-seed, which is the earlier stages, I feel like family and friends or an angel investor would help. And if you can even possibly bootstrap your fund at that point, you should just bootstrap it. And then once you started gaining traction, then you can now see investments and the likes.
Okay. I see that you also fall into the school of thoughts that when you're starting off newly or early as a startup, you shouldn't be looking at VCs. Maybe you should be looking out for grants, business grants, angel investors, and maybe just bootstrap till you're ready for VCs.
Yeah. Yes.
Okay. All right. Thank you very much. What are some common challenges startups face in securing funding? And what strategies can we propose to help them scale through these challenges?
I think one of the biggest things that we've seen is your pitch, first of all. A couple of startups don't even know what their products. And some of the startups don't even know what their products are really about. They are all over the place. Sometimes they're just trying to copy and paste another innovation in the market just so they can raise funds early. And like I mentioned earlier on, I don't know if the network was clear earlier. I said VCs go way back, even down to the early times of the expedition to map out the world, the Da Vinci innovations. These were the Medicis were people that were giving their funds to these innovators to go on and build some of the things that came on to later change the world. So a VC firm is not most likely going to give you money if you're doing the same thing as every other person, and there's no extra level of innovation to it or that makes you stand out. So know your what makes your product different, what's the innovative part of your product, and then clearly communicate it. So people will give you pitch decks that are 20 page, 30 page long, and it doesn't even spell out what you're actually building. So I think those are like the earlier, I think the first things I can point out as one of the challenges that startups always encounter when they are trying to raise money from VC firms. The communicating your idea and having an extra level of innovation in your idea, some of the things that leads to you not getting people.
I'm trying to get that question. Say, what is vesting? So he said, please, what is vesting? And that's the question from Boga Kaka. And then we have the same person. How do you decide which startup to provide funding for, and what factors determine how much equity you take?
So I think the first one I've already answered it when we were talking about some terminology. So vesting is just a period in which it takes for your shares to most likely become accessible within your firm. So this is very key to VC firms. Usually, when they invest in a startup, they would put clauses on their term sheet that says, okay, for the founders or co-founders, your shares will have to vest for a period, just so that they see the work done by those founders before they start looking at maybe selling off their shares. So I think that's literally what vesting is, by keeping something for a period of time. I think the second question was, how do you decide which startups to provide funding and what factors determine how much equity you take? So I think this is the factor. The second part, which is how much equity you take, is peculiar to every VC firm. In every VC firm thesis, there's a range that they put. So they would have ranges of, okay, this is what I'm taking for this amount. For us as a firm, we have an average of 7.5%. So we would most likely fall within that bracket. So it's 10 to 15 or an average of 7.5. So every firm varies. But I don't think there are VC firms that most likely come up and take more than 30%. I feel like anything above 30%. Which factors, how do you decide which startups you provide funding for? This is also peculiar to VCs. There are VCs that are sector agnostic. Okay, I think this is a term that I should have mentioned also. And there are VCs that are sector focused. Your sector agnostic means you can back from different verticals, which means different sectors. And if your sector focused means you're looking out for a certain sector. So some VCs will say they only invest in clean tech, health tech, prop tech, fintech, and then there are VCs that invest across the board. So I think if the question is directed at us in particular, we are sector agnostic as a firm. We invest across the board. And how much equity is an average for us? Somewhere between 10 and 15.
And this is from Ahmed at Debisi. So he says, you mentioned your area of focus as Northern Nigeria when you began. So what propelled you to this region? So Ahmed is asking what propelled you to the Northern region.
I used to be I built startup products. I built out of this region, so I kind of know the unique challenges that comes with this region. There's not a lot of VC activities, if there's any. I think when we started, we were like one of the pioneers, one of the first firms to say, okay, our current focus is on Northern Nigeria. And I think over the last 18 months, I've begun to see activities happen a lot within this region. I've seen about two funds have been announced. I think just last week, the past governor of Kaduna State announced a $100 million fund, which he can say is committing $2 million of his own fund to and starting a VC firm. So I think there's been star regions are also building innovative things. So and also to add, we do imagine an underrepresented region. So it's not just peculiar to northern Nigeria. It could be southeast, north, and southwest, wherever. We just feel like it's not getting that necessary attention. Or currently, we are focused on northern Nigeria. And I think one of the things we started out to do, we began to see activities. And we hope that from these activities, a couple unicorns, so I missed out on unicorns when you mentioned terms, a couple unicorns are able to emerge and people build impactful products and startups that also helps the lives of the citizens in that region, in Nigeria and globally.
Can you offer more practical insights for perfecting startup pitches? I know you've mentioned that one of the key challenges that these founders and entrepreneurs have is making a good pitch. I mean, you're supposed to have something good. You're supposed to tell a story. So one of the things I tell my founding friends are like, you should make it a pitch, make your pitch a story. So I think one of the best kind of pitches that you would ever listen to is a pitch that is written in a storytelling form. So now, can you practically tell us how founders, entrepreneurs can come up with the best pitches for their investors?
I think we had an intern just recently, and one of the things she learned from her time with us was drawing up comprehensive text or reviewing what we need to see in text. So I think one of the key words is simplicity. Keep it simple, keep it straight to the. As a VC, I can see through most of the elaborate words that you are trying to maybe sugarcoat or whatever. VCs already know a whole lot of this stuff. So first of all, just what's your product about? We want to see your competition because we want to know what's different from your product and other competition. We want to know the market size. We want to know the addressable market. We want to know the serviceable market because with that we can forecast what the tractions would look like. So I think aside the story that you're telling in a simplified form, we want to see what those numbers should look like. Then we want to see the technology aspect behind your product or whatever you're building. So I think those are like basics for VCs because when we look at decks, we have like four things we go to. What's it about? What's the story? Is there a market? What do the numbers? We also want to see your team. Seeing how well you deliver on what you're saying you are about to build or you're building. Yeah.
Another thing is the projections, the financial projections. So for some investors, they want to come in when you've made some significant figures. So the figures you're projecting, you should be able to defend them. Okay, over time we've made so and so money, and I think those are really key things to consider. And then how you present your startup, your pitch. So for me, I don't think the founder necessarily needs to make the pitch. I don't know if I'm wrong about this. I don't know if you have any objection about it, but I think it has to be someone that can convey that pitch in a compelling manner because you have judges, you have people that are going to listen to you. So if you are, I mean, there could be founders that are not good with making speeches. If you don't want to go and learn how to make speeches, how to make presentations, I think then you can get someone from your team that has the command of language that can make that compelling pitch to your investor. I don't know if you have any objection to what I just said.
When it comes to who makes the pitch, there's no law that says it has to be the founder. Once the founder clearly understands what the mission is about, he can have anybody else from his team make the pitch. The thing is, a lot of people feel like the founders have to like carry everything, but there are times that's why the team is also important. Some founders are just the technical ends of things. The co-founder might be the administrative ends of things. So I think what you said is valid. Anybody can make a speech. All
right. Thank you very much. Thank you very much for endorsing my idea. We've looked at the various types of investors and looking at the trends in technology now and emerging technologies. So what areas do you think that investors are really keen on putting their money into at this moment?
I'll say from a general point, and I'll also say from our own perspective. So the thing is this, yeah. for every trend that comes up, investors would most likely rally around it because they don't know how big it will get. An example was when the metaverse space was the current bubble. A lot of investors had focuses or set up funds that were focused on that space. Currently, the AI space is really a trend or a frenzy at the moment, and a lot of people are rallying behind that. So with the AI space, I can see longevity to that. So yes, investors are always looking out for someone building something within that space to at least have on their portfolio.
So can you tell us what's going on in Scath? What are your vision? What are you looking to really put focus on when it comes to investing in startups in different areas of the ecosystem?
Okay, so I think some main mission or part of our thesis is first of all, we want to bridge the gaps, like we always say, within these regions that we identify as emerging or underrepresented. And we want to do it from 3 points. We want to do it from a knowledge point, an infrastructure point, and also a funding point. That's why with Scath Group we have like three main features, which is we always have like a hub wherever we operate. We always have an academy, a talent academy wherever we operate, and then we always set up an accelerator program that writes current check sizes of an average of say $50,000 for across the average equity take that I mentioned. So why do we do these 3 points? Because when you look at it from an emerging and underrepresented region, there are a lot of bridges that difference. A couple of startups go on to risk a lot of money and pack up. A lot of people think that because you raise VC funds, you're successful. That's not the story. I feel like when you raise funds, if you don't have a clear projection, you're most likely going to crash and burn that whole fund. So we try to do it from this 3 points where we want you to understand why do you need to raise. You need to raise. Who are the options you have to raise with? Those are the knowledge gap. We do it from a talent point because we want to be able to match you with people that we know that are better talents if you're building products under our portfolio. Because like you mentioned, the team is always very important. We want to have you work with teams that can actually deliver on your mission without you having to burn through a whole lot of your cash by outsourcing. And then the last one, we set up an accelerator so that these innovations or people that are building know that there's a pipeline for them to actually put out their pitches and somebody will actually look at it and take interest in it and either invest in it or link them to a suitable investment vehicle. So, and then lastly, build around the community. So yeah, I think those are what we are focused on at Scath because I look at it from a founder perspective. These were all the issues I faced when I was building.
Okay.
For the earliest those product, I didn't even know what a VC was. So you can understand somebody building products and not knowing what a VC was. You already have a knowledge challenge. Then I built the team structure, or we built the team structure and the talent structure because I was always very lucky to work with people that understood the vision and could deliver the vision. So I know how important it is to have like a proper team and also have a proper team structure. And then lastly, funding. Funding was a very big challenge for me building. And like I said, I didn't know what VC was. I remember having an offer early on where somebody wanted to write me a check, but they wanted like half of the product, half of the equity in the product I was building. I kind of turned it down then, but looking at it now, I'm like, I negotiated the deal. This could have been, it's valid. He wanted a huge success because he was an angel. Well, there was all of that problem. So we just try to address it now with our firm.
Awesome.
So yeah,
awesome.
that's what we're up to. And like I mentioned, we look at different verticals, so across different sectors.
Awesome. That's good. That's good. That's good. So I think before I go to the last question or so, we have a question in the comment section from Poga again. So can you give us a few tips and tricks that would help founders in building startups? And also how much tech plays a part in this? I think you've already incited on some of these things. But do you want to add anything to that?
Yeah, so the thing I would add is I think I always have this example whenever I have to do talks or anything. I say Uber is Kabu Kabu that added innovation. So if you look at it from that, if you if you if you look at it from that perspective, then you understand that whatever your idea is, if you are able to add technology, then it now becomes innovative.
Mm.
I usually crack a joke sometimes with the team and say, I'm looking for the shoemaker that would be able to deploy technology to the solution, and that automatically means I can stay anywhere I want and get my shoes. So like just random stuff like that. So I don't. Somebody might carry that idea now.
That would be awesome. I mean,
yeah. The end goal of it is that people are so focused on sometimes building certain kind of products that they miss the products that actually have a large market sometimes that they can't just clearly see. But the key thing is you always need to add tech. Tech is what would end up bridging it together and making it innovative. So I think those are like the tips and tricks I can always give founders. Look at a problem and solve it leveraging on tech. And don't always look at the same problems people are looking at, unless if you really know you have a better solution than what is out there.
yeah, that's more like going into a saturated market.
Other than that, a lot of pieces will pass. Yes.
You are in the venture capital ecosystem. So, what is the future of venture capital? And looking at the fact that we have emerging technologies, trends, and everything, are investors now looking more of into the trends than the cutting edge technologies that are emerging?
So yeah, the future, I think that's a two-part question. And the first part is especially within the region or the country or the continent at large, the future of VC is very promising. And look at it like that might be the secret sauce that the continent has missed out on for the longest time. Because when you look at the history of VC and you look at a lot of structures in the world or things in the world, you see that there's VC integrated in a lot of it. I could give you an example. So aside, like I said, the early voyages, if you look at football, the sporting sector, and you look at some terms, you see some terms that you see in the standard VC term sheet, right of first refusal, stuff like that. If you look at the creative industry also, VC industry is something that leveraging on it from a continental point or from a country point of view is something that you can build on, and it will be very impactful to the subsequent generations to come out of. And then when it comes to the second part of the question, the future is very bright. That's just what I'm trying to say. And I think one of the key things is people are beginning to get awareness on that fact. Like I mentioned, even in this region, new funds are springing up, past politicians setting up VC firms, individuals coming together to do this because they understand that, okay, you could have been the person to invest as a VC in Dangote at an early stage. That would have been good numbers. Or be the person to have invested in some of these corporations at early stages. And if you can have that kind of vehicle set up, then you now get to see a whole lot of benefits to the country at large. And then the last one being trends is, I feel like this now is peculiar to the firm. Some firms would most likely ride the wagon and go with the trend because it might be a safe bet, or even go with the same deals that other successful firms have gone with. But I feel like one of the key successes that a VC firm can have is also being able to identify new markets or new innovations early on. Because then the MYC, which means multiple uninvested capital from that, it would be really, really good towards their fund. So yeah, following the trend isn't bad, but at the same time, do not be solely focused on following the trend because there might be other innovations out there.
So in the last decade, we've seen advancements, we've seen the surge of innovators, and we've seen different skill sets coming on board. So what is your projection for the next decade?
So if you look at it from with data, the growth in technology is really exponential, and it grows exponentially significantly as we progress. It took Facebook, I think, about a year to get their first 1 million users. It took ChatGPT, I think, 2 days. It took ChatGPT 2 days. So as the technology evolves or as time goes on, the possibility for technology is limitless. We are seeing stuff that we figured would not happen in our lifetime already happening when it comes to AI, ML, and the likes of it. So I feel like it's going to be really fast paced. So everybody within the space would need to ensure they are able to keep up.